If you had to choose just one adjective to describe the sentiment at these conferences, what would it be?
Positive. I wouldn't say buoyant, but I would say positive.
Otis Gold Corp is a gold development and exploration company with quality projects in the pro-mining state of Idaho. Otis's flagship Kilgore project has a resource of 961,000 gold ounces, and its recently published preliminary economic assessment demonstrated an impressive post-tax IRR of 53% at $1,500 gold. In addition to the significant expansion potential at Kilgore, Otis is exploring its highly prospective Oakley project. This Carlin-type gold deposit already has an inferred resource, and previous near-surface drilling intersected 123 meters of 0.69 grams per ton gold. Otis Gold Corp trades in New York under the ticker OGLDF and in Toronto under the ticker OOO. That's triple O. To learn more, go to otisgold.com. That's otisgold.com. Greetings and welcome back to Mining Stock Education. I am your host, Bill Powers. Thank you for tuning in. I appreciate your listenership. Feel free to reach me at bill@miningstockeducation.com if you want to engage the show with your comments, questions, feedback. I do appreciate the multiple emails a week that I receive there. Well, I'm bringing to you today an expert perspective on the junior resource markets. We're going to be hearing from somebody that not only is a president and CEO of a junior miner, which with projects in Idaho, but this gentleman has also been a co-founder of a private equity group that invested in mining and metals, and he worked for a gold producer, so he knows what the producers are looking for in these junior development projects. I'm speaking of Hugh Agro. He is the president and CEO of Revival Gold. With that being said, Hugh, welcome to the program. This is your first time, and perhaps you could begin by providing a little more background on yourself so listeners can get to know you.
Good to be with you, Bill, and thank you for having me. I'm a mining engineer by background. I've been in the business for 30 years, most of it on the growth side of the gold business, with major companies, as you indicated. Cut my teeth with Placer Dome, and then went on to Kinross Gold, where I was part of leading the growth of that company from 1.7 billion market cap to 17 billion market cap. When I retired in late 2009. Over the years, I've learned a lot about this gold business, and when I saw the opportunity emerging in the space 2 or 3 years ago, it was really just too compelling, and I came back to the space, founded Revival Gold with a number of colleagues that I've worked with in the past, and are underway now.
You recently were at Beaver Creek, the Precious Metals Summit, and then also the Denver Gold Forum. Can you share with listeners the sentiment or the feeling that you experienced there?
Well, I have to qualify it, Bill, first in the first instance by saying, we explorationists tend to be glass half full people, so. Take my views somewhat with that in mind, but I do feel that there's a general improvement in the sentiment. Obviously, the price of gold is up almost 20% or thereabouts since the spring, and that brings a good mood to those conferences. Beaver Creek is focused on the more junior players, and what I would say there in the stats, we saw about a third more buy-side attendees this year than in previous year, and there was clearly an intent on the part of those buy-side participants, those institutional investors, to find good value in the junior sector, having made some healthy returns in the more senior stocks over the past few months and years.
Is that like a mandate that comes down from their higher-ups within a lot of those funds that, okay, now I need you to start looking at the juniors?
I think it's just a matter of balancing their portfolios. As you probably know, the senior gold stocks tend to move first in a cycle. We're in a positive move in the gold price, an upward move in the cycle on gold. I would say it's been that way since about 2015, with a few bumps along the way. We're on an uptrend, and it takes a while for it to filter down through the intermediate cap companies and then into the junior cap companies. And of course, it's where the juniors are that most of the money is made in the cycle, because that's where the best leverage is.
If you had to choose just one adjective to describe the sentiment at these conferences, what would it be?
Positive. I wouldn't say buoyant, but I would say positive, and that's a very good sign because I think at the point where you see a buoyant mood, we're probably reaching a peak again, and so I view the current mood as very constructive for junior miners and investors in the space. And if I could just continue on the theme for a moment, the big problem in our business is that there are not enough projects to go around. And when the gold price starts to move and the senior gold companies look to fill replace their reserves, they'll be scrambling for a place to sit. There just aren't enough good opportunities in good geography for investors and big gold companies to find assets to replace reserves and build growth.
On that note, when you listened to some of the majors present at the Denver Gold Forum, what were some of your key takeaways from those presentations?
There's a lot of discipline, and I think that again is good for the business. We won't see a mad rush to find those seats that I spoke about earlier. It'll be well executed this time around, and I think the senior gold companies will be somewhat patient. The other thing is we saw quite a lot of talk on what's now being called ESG, or environment and social governance. So these big gold companies are wanting to appeal to generalist investors, and they have to pull up their socks on ESG and ESG reporting. And we saw that as a big theme at the conference this year. So again, it speaks to, first of all, being disciplined in your approach, and secondly, making sure you have high standards on ESG and operate in good jurisdictions, because those are the places where the big gold companies and the large institutional investors want to invest.
So with the major mergers between the gold producers that we've seen in the last year, how do you think that affects you as a CEO of a junior gold development project? With this expected divestiture of projects, how does that impact what you're doing?
It's fascinating to me. We've seen this tape before back in the 1990s, early 2000s. The gold industry went through a consolidation phase when investor interest disappeared. And so I think we've seen that now, and the discipline that it brings to the sector is good. It causes folks like me to become all the more excited about the opportunity for us to fill the void, so to speak, because, as I say, there's a real crush for good growth projects in gold in safe geographies. And these gold companies, although they may get bigger and although they may enjoy some operational synergies from those mergers, they still haven't solved the problem of how to replace reserves in doing so. It makes it actually harder for them. They become bigger. They need more reserves to feed their growing production demands, and their investors do as well, and the pressure will build.
Wasn't one of the things noted at the Denver Gold Forum is that over the past 5 years, a lot of the majors were mining significantly above their reserve grade? Yes,
one of the stats that came out of the conference was something in the order of 20 to 45% for a number of the leading players. So that is to say, they're mining a grade from their deposits which is above the average grade, which means they're enjoying the benefits of that today, but in the future they'll eventually be mining below grade and having to do so at much greater expense. And so it compounds the problem. Another interesting thought here, just as we're talking about this, these senior gold companies, it's fascinating to me that a year or two ago, they were talking about rationalization. They were talking about delivering cash flow to shareholders. And interestingly enough, one of the biggest players in the space, Barrick, was talking about exploration. So again, I think this move in gold price, the confidence that the senior gold producers are feeling around their cash flow and their situations, the fact that we've got past these big mergers and are now thinking about how we replace reserve, has led these companies to make the next step, which is, exploration, and then the next step after that, of course, is the feverish pitch to find those great growth projects in gold that they can add to their portfolios that juniors are developing.
If Barrick was talking about exploration, was it because it was material news, or they just wanted to assure their shareholders that we're working on new reserves?
I think it's the latter.
Okay. And of course, they would have to grow their companies, as we've alluded to here, through acquisition. I guess what was behind one of my previous questions, Hugh, was with the expected divestiture from some of these non-core projects that the gold producers are expected to sell off. Do you think for a company like you that would that increase the likelihood, if you decided to sell your project in the future and be taken over, that the potential buyer would be one of the mid-tier gold producers rather than a major? What are your thoughts here? What can you share?
That's an interesting question. Everybody tends to focus on what the big players, the Newmonts, the Barricks, the AngloGolds are doing, but there's a whole cadre of 2 to 3 dozen intermediate players, some of them quite big, and that's a relatively new situation over the last decade, I would say, and it creates a broader spectrum of potential business partners, acquirers, and the mix is actually very advantageous for junior developers today, because you've got a lot more folks to talk to about your project.
And what are your expectations, before we move on to talk about your specific project, what are your expectations for this upward move, gold move? How many years do you think cyclically we could look at an upward trend?
Oh gosh, I'm no better than the next guy in predicting the cycle in gold. What I can tell you is the last cycle was about 10 years, and typically they run between 2 and 7 years. I think if you go back to the research, so I would say 2015 we bottomed out in the gold price in the most recent window. It's taken a while to sort of get some foundation, but over the last 6 to 7 months, I think we've seen that, and I think we've got 3 to 5 years ahead of us here, and there's no reason to believe that the fundamental causes for the pickup in the price of gold, which is I think related to the central bank activity. There's no reason to believe that any of that's going to disappear overnight. Equity markets have topped out and have been toppy for some time. Central bankers have put lots of money into the system. There's been an erosion of the savings in the world, and in fact, we're in negative interest rate territory for much of the world's savings. That all bodes well for the price of gold, and I see no end in sight in that regard.
So as the CEO and president of Revival, then, do you see this 3 to 5 year potential window as kind of your time to capitalize and make the most of this project?
Absolutely. And the great thing about the scenario we're in now is there is still good value in the junior space. And while the bigger companies have enjoyed some benefit from this pickup in the price of gold, there's large institutional investors who are now coming back into the space, we still see value in the space. And so that means for a company such as Revival Gold focused on growth, not only can we grow organically, but we can also look at opportunities to grow inorganically. That is to say, we have our eyes out looking for other opportunities to bring to our shareholders where we can crystallize value. It's a good time to be in the gold development business in good geography.
Hugh, we featured Otis Gold Corp, your peer there in Idaho, which is a sponsor of the show, and you have 2 projects there, the Bear Track Gold Project and the Arnett Gold Project in Idaho. Please give us an overview of these projects.
Firstly, let me say we love the guys at Otis Gold. They're doing super work on that project. Kilgore's an impressive project in its own right, and it's part of the general theme in Idaho, where companies have come back to the state, recognizing that there's really interesting geology and really prospective gold projects and prospects. Bear Track is the largest former gold-producing project mine in Idaho. It's got a great pedigree, and we have on site a lot of the infrastructure remaining, including processing plant and roads and power and so on. That's given us a bit of a head start with our Bear Track project. And when we got started in Idaho, we assembled a neighboring land position at Arnett, which is right next door. So the combined Bear Track Arnett project is some 12,000 acres. We have 2 million ounces of gold in the resource. And just today, we announced additional results in the Arnett area, which is completely outside of the existing 2 million ounces resource, and where we're developing up oxide gold resources for a planned updated resource in the first quarter next year. It's an exciting state to be in. We've got some great peers like Otis in the state, and together we're building Idaho into the next new Nevada in terms of gold production in the United States.
Yeah, and Idaho has had a very favorable ranking. Remind me, what is the recent ranking, the Fraser Institute ranking of Idaho?
Yeah, I can't give you the specific number, but I can tell you that it ranks above some of Canada's premier jurisdictions for mining, like Ontario and BC. It ranks above Mexico. It ranks above Finland. It's really something, and folks are starting to wake up to that, of course. But the opportunity for gold in Idaho and good value in Idaho for investors is still there.
The company is Revival Gold. You can find more information on the website at revival-gold.com. That's revival-gold.com. Hugh, as we conclude, would you like to share any final thoughts with my listeners?
Just to thank you, Bill. Your program is super, and I think this is exactly the kind of information that investors will profit by.
Auryn Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Auryn's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Auryn has been called one of the best in the junior exploration sector. Auryn trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurynresources.com. That's AURYN resources.com. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at miningstockeducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.